Welcome back. Next, we're going to talk about current versus non-current liabilities. Remember, current liabilities are those that are come due within the next 12 months. Non-current liabilities are due after 12 months. So we're going to talk about it within the context of unearned revenue, which you probably remember back from when we were talking about AJEs. Okay, so our example is on 1/1/19, we're going to sell a 3-year subscription for $360,000. Okay, so at the time of the sale, we're going to debit cash. We're going to debit cash $360,000 and we're going to credit unearned revenue $360. Remember, unearned revenue is a liability and we're going to credit the liability because we have not performed the services yet. Whatever the subscription covers, we haven't done it yet. Okay. So on the same date, how much is current and how much is non-current? Well, let's figure that out. So our total is $360,000. Divided by, it's a 3-year subscription, so 3 years means that every year we will deliver $120,000 worth of services. So our current is 1 year's worth of services, or $120,000. Our non-current is the balance in our unearned revenue account, which is $360,000, minus the current portion of $120,000. So our non-current is going to be $240,000. Because our balance of $360,000, which was the journal entry we booked, minus our current portion of $120,000 is our non-current portion of $240,000. Okay, fair enough? Let's keep going through. All right, the next thing our worksheet asks is, now it's 12/31. And I'm going to do my unearned revenue T account just so I can keep track of things. Okay, so on 1/1/19, we credited unearned revenue for $360,000. Now it's 12/31/19, and we are going to recognize 1 year's worth of revenue. So to do that, we're going to debit unearned revenue. For 1 year's worth, which remember we said was $120,000. And we're going to credit revenue for that same $120,000. So now the next day, 1/1/20, how much of our unearned revenue is current and how much is non-current? Well, first of all, let's figure out what's even in our account. So on 12/31, we recognized $120,000. So we debited the account $120,000, so there's $240,000 left in the account. All right, our current is everything we're going to earn within the next 12 months. And remember, we said 1 year's worth of revenue is $120,000, so that doesn't change. For our non-current, we need to take the balance which is $240,000, And then we're going to subtract the current. So our non-current is 120,000. So 1 year after we sell the subscription, when we've delivered 1 year's worth of services, the balance is 240,000. The current, the portion that we're going to deliver within the next 12 months, is 120,000. And the non-current is also 120,000. All right, we got 2 more to do on this, and then we're going to switch over to short-term notes. So next, on 6/30/2020, we recognize 6 months worth of revenue. So let's do that. Okay. On 6/30/20, we are going to recognize 6 months worth of revenue. All right, so if 120,000 is 12 months worth of revenue, then 6 months worth of revenue is 60,000. Another way to look at it is we originally sold a subscription for 360,000. That was good for 3 years or 36 months. So we're going to recognize revenue at a rate of 10,000 a month. So it's 6 months has passed since the last time we booked a journal entry. So we are going to record a journal entry for 6 months worth of revenue, which is going to be 60,000. So we're going to debit unearned revenue, 60,000, and we're going to credit revenue, 60,000. All right, on this date, how much is current and how much is long-term? On 7/1/20. So the next day. So the balance in the account is 240,000 minus 60,000. So we have 180,000 yet to be delivered. All right, how much of that is current? It's still 120,000. If we are recognizing revenue and delivering services at a rate of 10,000 a month, then over the next 12 months, from 7/1/20 through 6/30/2021, we are going to recognize another 120,000 of revenue, meaning we're going to deliver $120,000 worth of services. So our current is still 120,000. That doesn't change until the entire balance gets below 120,000. Our non-current is the one that's getting smaller. So our balance is 180,000. Our current is still 120,000, so 180,000 minus 120,000 means our non-current is now 60,000. So the important thing to remember is the current portion of any liability is the part that will come due. Either we'll have to pay it or we have to provide services within the next 12 months. Non-current is anything beyond that 12 months. The current generally doesn't change until the entire balance is all current, basically. It's the non-current that decreases as time goes by until the entire balance becomes current. All right, stay tuned for the next video. We are going to talk about short-term notes payable. See you then.